Okay, so welcome everybody. My name is Lewa Incumbent, and I'm here to take you through a week. How is the week going? How did it go? So let's look at the red list. On the daily from UAGCHF, let's look at the monthly or the weekly. So we can see our prices within this range. Prices within this range. So let's look at what is happening here. Okay, before I'm going to analyze the USDCH, last week I analyzed JPY pairs, and I will go over that one first before I come back to the USD. So let's go over to the JPY pairs first. I will move them to section 1. Okay, so then JP225. JP225. So on JP225, last week, I saw say we were in the corrective structure. Price was in the corrective structure. And I drop it to the downside. Right? I drop it to the downside. So you can see this arrow here. Price moving impulsively, and we form this reversal model here. Nearly drop it. Here's an impulse correction continuation and reversal. So this reversal never. What I'm looking for is a happen is at least price will be moving 90% of this range. 90% of this range. And where is 90%? 90% is here. Right. Price and to me it looks at 90%. If in price and tap into the original value area, we left a gap to the downside here in the drop. So if you're breaking below this structure and you're breaking back in now, what I'm looking for is price to push the upside to tap into this original hook point. You give us a signal, and when we push back in, I will look for continuation to the lows here, or possibly to the downside here, because enough volume has been built. So let's look at what's happening here. Let's wait for the week ahead and let's look at what is happening here. So I'm not surprised by this impulsive move, because I was anticipating this impulsive move actually. I was anticipating this impulsive move. I knew I had this area on as now 90% of this range, of this particular range. Here, so I had this area on already, right? And price broke this area. I'm expecting price to either push back in to continue the move to the upside, or leave a hook point, tap into this area, and you continue the zone. So what is happening here? Price have left the gap, and now we have taken this high. The mechanics are happening. We are on daily. You can see the price we work for our now. This one is a hook point. Price airdrop to the lows. Even when we are playing, even if we are playing this range, I believe that we have enough area to move. So within this range, let's look at 90%. Okay. Okay, so the range is enough. What is happening here is the mechanics. Price left a hook point here. So high we enter and take it high. This high equal to this high, and so high we will take it all the high, but we still have a gap here. So there's a likelihood price will then continue this structure. Break this hook and come back in before we continue the move to the downside. So let's look at what is happening. Let's wait for the week ahead. And this is the JP225. It's like the dollar index of the Japanese yen. Let me say it like that. The dollar index of the Japanese yen. So and it also have it has the ability to show us where the possible future moves are, on the JPY pairs. So due to this thesis of price from this range, from this impulsive move that we are capitalizing on, price I will leave hook point in a price. The mechanics are happening here, and the transfer price about fill the gap in the mind signal and a confirmation, so that you can look for entries to the downside, right? So how the way happening will have an impact on the JPY pairs, the structures on the JPY pairs. Now this move is correcting. We are in the corrective zone. I'm not looking forward to look for buy setups at this zone. No. Why? Because here is the original value area that I'm looking for to tap, that I'm looking for price to tap into before I continue the move. This is a sell setup. Yes, a reversal. So me looking for buys won't give me an edge. Yes, maybe I can get in on winning trades, but that it doesn't mean it fits the plan. Yeah, it doesn't mean it fits the plan. So what I'm going to do is wait for price to tap into this structure. However, either we form a corrective structure and move into the zone impulsively, or price will drop and give us the 1, 2, 3 model. Maybe something like this, so that you can continue the move. However, but maybe like this, price will form a middle stretching to give us the third touch here, and you continue the move. However price will do, I'm looking forward for price to tap into this structure, either a 3 touch or 2 touch continuation. It can be a 2 touch like this. Price can move here impulsively to pull out the 2 touch, right? And then we start to push back in. However, the mechanics have to be in place. Price leaving the clues, leaving the gaps, breaking the highs and breaking back in. It have to be in place before I look for opportunities, before I step in the market. I have to follow the systematic process that I use to define my setups. So where is price positioned? How is the sequence, or the progressive manner of the sequence, and then the entry. Because if I don't position myself well, I will miss out on the move. I will miss out on the correct move or the main move. Let's look at this one here. Price generated volume here. Here is the third touch. Price move impulsively. Now, when you are positioned at these areas, trying to look for sales, let's say here, you are positioned very well because you are in a run. Volume has been built, impulse, correction, continuation, and before you enter the structure, you from the higher time frame, you overtrain for price to break above the structure. You break back in impulsively. This structure, unya sa or corrective structure you handle. Corrective structure where you wait for price to push back in like this, and then you put your stop above the heels, the wicks, and you continue the move. Impulse, correction, continuation, signal, price action, confirmation, volume triggered, volume generated, and you continue the move. The same thing, you wait for price to create a hook point, leave a hook point, you drop, you left a gap, price has taken all of this size. Example, if sell position on has to take this double top, you will get wiped out. You will get wiped out if you don't understand, because you don't understand how the market is working. You will get wiped out like this. It looks like a quality setup because you have a high here, price above the top, when you're on double top or something like that. It doesn't mean price can go from if you go say in couch and time move when the price with me and drop like this. Now one day you don't need to be a trader to get in on a winning trade. You can happen to get in on any move just by clicking the sell or buy button. That one day will be sold. It doesn't require any skills. What requires the skill set is how can you use this knowledge that you know to predict something that is unpredictable to get consistent results. That is a key skill set. You use the knowledge of the market to predict this market, which is unpredictable by the way, because the people that continuously try to predict the market will continuously fail. The market is unpredictable. You have to come to understand the belief that you don't have to know what is going to happen next to make money. You don't. Exactly, you don't, because you will never know what is going to happen next. As I day here, I can say due to the repetitive market behavior, there's a likelihood price will come to this structure and break above this structure and break back in. There is a high probability, there is a likelihood. It means maybe 50% or 60% of the time when price leave this hook point here and we leave these highs and things, now price leave gaps. You take it our gaps, and then we break this structure. When we break back in, there's a high probability price will now here will be the sequence. Price will form this kind of sequence, and then I'll continue this move. I will be able to add on to my positions like this. This is a probability, a high probability, something that happens in the market more than the others, more than random. So although it is random, but it happens consistently. Although the outcome of this pattern or this mechanic is random. For example, that structure we here was a CCA. Price a bit me about the break about this structure. A bit me again, per se, price will push back in, which is my confirmation. Maybe I can get in on a risk entry here. First move, price ever drop it, ever my correction. I can get in on the insurance entry. Second move, and price can still take me out. A price action, I don't have to know what, but what I know is if I wait for this kind of setups for these mechanics to happen, and I execute this kind of setups without error, then I have the odds in my favor. I have the odds in my favor. If I can be able to, or if I do this consistently, if I wait for this mechanics to happen in the market, this 1, 2, 3 drive in price for price to break and whatever, and not all of them are going to be winners. That's why it is a probability. Not all of them are going to be winners, and not all of them have to be winners for me to be a consistent winner. What is happening here is this move. Let's say price is at the highs here. I've gotten a risk entry with 30 pip stop loss, and I'm looking forward to take it to 90% of the range. Here is 5% on a single execution. 5%. Maybe this trade might lose. Fine. And the principle is, if I execute this kind of setups 100 times, I will win 50 times. Or there's a probability, say 50 times, if this thing happens, I will go in my favor. And if I'm leveraging this opportunity and 50 times, every 1 BR is times 5, how much difference is it going to make? How much difference is this going to make? 50 times 5. That is the percentage that I'm going to make over the losses, minus the losses will be the overall profit. Right? So if the risk to reward is in your favor, even with 30% risk, 30% win rate, 20% win rate, you don't even have to, you don't have to rely on the win rate, by the way, because you will never know your win rate until we execute here. These things are something we see the normal, but it is not normal. Some words like setup, your edge, confluences, and yet normal like that, but we use them saying normal. Okay, it is not right. So let's pay close attention to the price action, the formula for filling the week. So JP225 has given us this structure. So this we have the clues here. Now if we go to any JPY pairs, that's the price a movie upside down, a movie to the upside down, you know where it's coming from, and you won't be rushed, you won't be fearful, say we are price will ever quit down now get any move with the back, because you know why price is doing that. So JPY pairs, if you are not saying yes, you know why price is doing that. Okay, so let's go to the NZDJPY. NZDJPY, last week I had this setup here. Last 2 weeks, this way last week, winner last week. Yes, so last 2 weeks, price and be a hook point again. The same things that happens in the market. The same thing that happens in the market. And the same thing that happens as it. Let's look at this structure. So price a movie impulsive, price a drop impulse, right? And they build the volume. I'll remember the volume in the one. I'll come to that in a minute. But let's focus on here. Price a movie impulse, correction, and reverse. Here's the reversal model, and this was the original volume that was built here to continue the move. So what I saw on this is how this was the structure. Let's say price MOV impulse, we have generating volume. Impulse correction and then continuation. And within the continuation, the third touching was impulse correction, which was volume being built. Volume was being built around this structure here. And I had a drop A. So we'll be doing the drop A. So you can see say the drop A impulse and another correction. Look at this structure here. You leave gaps. You leave what? Gaps. And then 1, 2, 3 structure. You leave gap where I see price be break is a gap way. The price be break is a gap way. You push it back in strongly, and this is the moves. Price correct 1, 2, 3. You tap into this structure again. You see the market like I say repeatedly, but if you don't have the skill set of a professional, you won't be able to see the market. The same thing that happened in 1, 2, 3. We left a gap, price will be key. 1, 2, we left a gap, price will be key. This structure we push back in strongly. Impulse correction, continuation. Impulse correction. The same thing that is happening over and over in the market. Impulse correction, reversal. We left a gap, we break back in. We left a gap, we break back in. The same thing that are happening in the market over and over again. So you don't have to know what is going to happen next. What they say, train for this one, the mechanics to happen in the market, and then you look for you execute your setup with your plan. Example here, price LV gap was in a LV hook point. I know say price about tap it into this structure. What's happening here is the price and tap it into this structure. So I say now me say there's a likelihood price then everybody tap it, break this structure, we break back in, we form this reversal and continue. Price and yes sir. And then price for me this 1, 2 structure, price for me correction. I didn't get in on these moves. Some opportunities but I didn't get in on the moves. Why? Because price and me and tap into this structure, or we didn't break this structure. So I know a pattern I trade. Yes, if I do this, I know say price can go, but it is not in structure. So I didn't take this opportunity. And what happened here? Price left the hook point in a pushy impulse correction continuation. Price into me and tap it into a major value area. Maybe I can be looking for buys. Price into me and tap it into that structure. Like this, we left a gap. And a price if pushing impulsively to the upside. And how did we approach the structure? Price pushing impulse in a building volume. And volume was built to the upside here, which is a reversal model. Impulse and the volume was built here, and a price at the drop pay. So let me go to the run and show you clearly. So you can see how I pieced this run together from the top here. Although I didn't go much into details, I'm just showing you the repetitive behavior of the market, of price leaving the gaps and breaking the highs and breaking back in. So when price is now, you prepare. I prepare for opportunities. That's the case. I prepare for opportunities. You have to say price will be correctly. In the year then you push it back in strongly. You can see say I didn't enter until price it break it back in. I see before I entered the move. It was my entire until price event every break it back in. Here I say in a reduce I say because I say 1-2, which is the reduced risk, but I didn't enter. Looking for price to break back in, and then I entered the move. Here is an insurance entry. I could have gotten that opportunity too. Another one, you can see 1, 2, 3. Another opportunity, right? So here, even this one was 5%. I could have gotten on around 3% move from here. 19. Let's see, getting on 20 pips stop. The 20 pips stop. The same target. 5% less. 4%. You see. So last week was amazing, and I can see from it is what happened. It did not happen because of the ECO JP225, right? That's how I mean when you say it did not happen on ECO JP225. So if JP225 is going to push to the upside a little bit, you can see say and also affording have effect on these structures. And now the in correction 1, 2, so 1, 2. Can look say you train for price to push a little bit up to tap into this structure, and then you continue the move to the downside, for price to break above the structure, you break back in, and then you continue the move. So GBP JPY. I will skip this for a moment. AUD JPY. Aussie dollar. Aussie yen. So this one, incredible moves. Very good, very great structure, very great pattern. What is it? Very great pair. Yeah, very great pair. A movie nice. Yeah, more amazing moves. I've been providing goods over the months, over the periods. Providing goods. You can see surprise drop is strong impulse, and I consider them say this was a volume being built too. So this is the impulse, this is the volume triggered, and this is the volume being built. Maybe I better pay how structure we say hook points. Here come me zooming out daily, weekly. I can tell you why I'm saying that, but we have this area here, and then I'm looking for a surprise bed and ever tap into this structure. Here nearly is an inflection point. I'm looking for a surprise bed and ever for me, ever building volume around this structure to continue the next impulse. The movie impulse volume was built here, correction impulse. We build volume to tap into the structure impulse, and now another one. We are waiting for the next impulse. Okay, so then price do I see a movie to the upside. I believe say we're going to me and testify say yes, it is because of what is happening on the JP 225. It is because of what is happening on the JP what 225 exactly. So last week maybe and then we had this na price I see price it will move up. We go to the 4 hour. Okay, let me mark this inflection on so you can identify this as an inflection. So I can identify this as an inflection. Last week, na price I see on. We have this one. So here, 1, 2, there's a likely see between here the third touch I see. But the biggest question is if say me third touch I say am I going to take the opportunity? Am I going to take the opportunity? Because there's a value area and so at the top here where volume was triggered here after so we ever trigger volume was we broke above and we broke back in impulsive we found some here do the side volume. So am I going to wait for price to break above the structure to break back in and then look for continuation or 1, 2, 3? What then I may, because how we also go to be a move. This structure to go to be a move and then continue. When we look at this structure here, we left the hook point. And then break here, we let in your gap what has here till price will break and then we continue the move. So here the high probable is a trying for price to tap into the structure to give me the signal, and then I look for the reversal because the JP225 is this week and next week I should say price will be moving up to tap into that structure. So if I look for sales here, I will get wiped out like everybody else, but I'm not everybody else. I have to position myself at areas where I give myself advantage. So as this volume is being built, the leaving gaps will I see. I'm not going to FOMO into any opportunity here. I'm going to wait for price to tap into this structure, which is a value area, a hook point, for price to give me the signal, and we continue. As AP225 is moving up, yes. USD JPY. Let me go to the daily. So USD JPY at the top, you can see on the daily we had pricing movie, strong impulse after volume was built here, impulse correction, pricing movie, strong impulse, and then we started to correct to the outside. Within this correction there was impulse correction and then continuation, but this continuation a form we say a reversal model. It was a reversal model. Within the model we had a 1, 2 and a 3 touch continuation. After you leave gaps weekly. Exactly. So now if you've been following me closely, you can see say all my trade setups, and not just normal setups. Setups that have been developing from the weekly, from the monthly, from the daily. It carries more weight. I know where I'm positioned, like value areas. So let's look at this moon in a price airdrop. My position in I see baby. That's the neighbor. I'll step it down to the 4 hour. Here's the weekly. So if I'm selling me opportunity behind me sell, there's a level of certainty within trading. There's no level of you can have conviction behind or setups and then you must say because the setups make your man according to the repetitive behaviors of the market, fine. But when you do this kind of setups with the higher time frame perspective, so we step it down to the 4 hour and lower time frames now. You know say your setups are being backed by the higher time frame structures. So pay close attention, pay very close attention. I see here's the value area where price at the drop it to I see. We left a gap. It doesn't mean say want to take it trade you see. So that way also was a volume that was built, and when price ever see you can position yourself at this area. Price elevate gaps so I see you may take you away you see. You have taken this order out, push back in, you can which way making money, you can make money here, impulse correction, continuation. You can make money here, you cannot tell me say you cannot make money within this call. This is a weekly about from 11th May 1998 to 99, about 1 year. You can make money from these structures. And now when we are playing this range, you can see say price elevate gaps I see nearby 1, 2, 3. We tap into this structure. As you tap into the structure, I'm going back to the daily. You have seen the entire position here. As soon as I see, so I'm going back to the daily. So price tapping the nya third touch near dropping impulsively. Now price push it up and also we push it up impulsively. We have our correction a drop A, which means volume was built here. Here is a direct impulse. Volume was built within it, but I will focus more on here. Let's see, here is an inflection point. And at price you do was saying volume was built here, price drop impulsively near coil. If volume was built here, that means I can position myself at this area. Volume was built here. To put the position more I say. And what happened? Price move impulsively into the structure. They move up impulsively into the area of interest. Price LV and reversal model. The third model, which is a reversal model, impulse, correction, and reversal, right? From here, Nankasa, who say on the weekly, no price tap into a value area. I'm looking for a young movie cry at least. We are coming to the lows here. Here is 90% of the structure. I believe that my many videos about this already. Here is 90% of the structure. Young movie cry, there's a likelihood say you will move it up to 60%. Right? So price airdrop into me call lower time frames to say 4 hour. So opportunities winning now. Let's go to the 4 hour and let's piece these runs together. Let's go to the 4 hour. Let's piece this run together. So here you can see clearly this structure. Within this structure, we had this corrective move. Price dropping impulsively. We left a good point. Price will be key. This one is clear on the 1 hour. Price push back in. Here would have been the first entry. Then again, let's look at this structure. Price left a hook point. Let me deal this. Price left a hook point. What did we see? 1, 2, and the third touch, price airdrop pay. We push it back in impulsively, tap into the structure, and then we move. Price airdrop pay. Here we didn't get in on this move because here's an average area. Price airdrop pay, impulse, another correction, opportunity. Price left the hook point, positioning yourself here. Price broke above, we push back inside, we continue the move to the downside, and now again. So you can see it is repeating itself. Price is repeating itself. Now we are at the hook point again. We are at the where? A hook point again. Price broke below this structure. I'll use this. So price broke below this structure. Volume was built here. So let's use this. Volume was built here. Price said dropping impulsively. So if volume airdrop pay has seen, here is the floor price here. The floor price I see price a bar and the big breaky. If we broke above it correctively, price a push it up. So there's a likelihood price are giving us the first touch, second touch, you go up to give us the third touch into this structure. We continue the move, or the third touch here, and then we continue the move. Somebody will ask, so I notice this is going through some of your heads, that why am I looking for sales straight away? Because here's a value, here's also a value area. Although it is inflection, but inflections are also value areas, and price can turn around from there. So if price is at this area, what am I looking for price to do? Well, to tell me that price is not going to move, right? That's why we didn't kind of call weekly to show you where price was positioned, or where price is positioned right now, and how the market behaved CCI the bar to the downside. So when price build the volume, reversal move that tap into the structure, they do as see they build the volume above this structure and we broke below. In a price, we are not even breaking back in correctively. Price a breaking here, then structurally we are in a corrective structure. The level gaps are high when we taking it out. These mechanics are happening. So price left a gap 1, 2. Price to take is a high way, but we haven't taken this high. We are looking for a sell. The second we see a high, we're going to take it out. So the second high will take out this high, and then we form the structure to give us the third touch, and then we continue. Which will be something like this from impulse correction, and then we look for continuation. Because why? Again, you can remember, I can recall you that the JP225 is going to move up temporarily. So if it is going to do that, it will have an impact on this kind of structures because of where the JP225 is positioned. That is why I saw never way in happening. I don't want to get caught in the wrong side of the market. Maybe say wait for price to build volume, give you a hook point, tap into the structure, allow the mechanics to play out, and then you execute. Exactly. So the same thing that happened was we transfer price already and better tap into the structure with the mechanics, and we continue the move. The AP225. Here's one is the USD Let's continue. This one is the Canadian dollar, Japanese yen, card JPY. Again, repetitive behavior, repetitive behavior, repetitive behavior of the market. We saw the same thing. Price a movie impulsively. I won't go any much further. Price a movie impulsively. We have a correction and we are continuing the move. Now, Rebecca said price. I have said price that tap into this structure. We left a gap and a price that tap into this structure from this volume that was built here. Into adding thing still make position me home for sales. Exactly. That will be a very valid question. It's not just a very valid question, a valid question. A great question, a great question. But the lecture only say, let's go back to the daily. Let's look at how the structure relates. Where is the volume? Where is the value? And we have different types of value areas. We have inflection points and we have what? Value areas. When we look at this impulsive move, we can see that we have this impulse, correction, continuation. Volume was built here. Volume was built here. Volume was triggered here. So areas 1, 2, 3. If you want to position yourself for sales, for buys, if you want to position yourself for the bigger buys to happen in the market, where do you think say are you safer to position yourself for the bigger buys? Here, here, or here? I believe intuitively you know that price is naturally going to snap back to this original value area. Here is original value area of interest. Why? Because volume was built here. Here is the origin part of this impulsive move. Pricing movie impulse within this correction, continuation. Here is the origin part. This one volume was triggered here. Here is the volume being triggered. A value area, but in the grand scheme of things, here is an inflection point because of the location. Because of the location, a inflection point. I hope you get my point. So when price is at this area, if you are going to move up, it will be temporarily. Besides, I believe say remove this impulse. This volume now build what I'm saying is enough. This volume is enough to push and break below this structure. We haven't broken below the structure yet, but we can see say we now price a leave 1, 2, 3 structure here. The building in a living gap what I see. Now the mechanics are happening. Now the mechanics are what happening. So you can see price has a value area. Price at the end of pay. So when price is coming, there's a likelihood we will tap into these structures and then we continue the move. We break above, we break back in. So this is what I'm looking for to happen on with Canadian dollar, Japanese Canadian dollar, Japanese yen. Yeah, because why? Yes, inflection point. This didn't I mean get hit on this move and say I don't want to get caught in the wrong side of the market. Price has broken this structure below. Now we are breaking back in. And we are breaking back in. Let's look at this move here. Here is where 50%. Here is 50%. So I'm looking for a price about to see around 50%. Continue the move. We have the mechanics in place. The thing can leave in highs. Let me clear this. The leaving in highs. So again, JP225. Price. Okay, why here? Because price MBV volume has near the drop impulsively. Here's a volume triggered near the way a hook point. We and we have tap into the zone. It's our structure when they tap into the zone. But here is the value area. Right, 1, 2, 3. Price will snap back here. Yeah, so I will position myself here. If surprise if we do have, that's your drop here. Fine, let's move. I will get in on another opportunity. There are more opportunities in the market. Let's look at SAHC. If we position one see price drop impulsively, but we have strong impulse near dropping and sign a price a retrace back. Which position we are getting on the move. But here there has been a gap. You can get in on this. And getting on this 1, 2, and then the debt has to continue the move. So important, very, very important. Continue them. So I'm trying for price to give me a better tap into these zones and then continue the move. Okay, so that one is done. That one is done. Okay, so I will get back to the USD pairs in a minute, but that one, what we have done, the review of the JPY pairs will be enough for the day. The review of the JPY pairs will be enough for the day. We have multiple pairs on watch. We have multiple pairs on watch. So I believe next week is going to be amazing. This structure, this EU card, EU UAD. For me currently, we are in the great area, so those are all shaping up. I just don't want to draw all of them on, so let's not draw them now. That's why I'm in this structure we are to. So I'm looking for price to break it below for the week ahead, and then we continue the move. Right? Continue the move with these structures. So next week is going to be amazing. Next week is going to be amazing. Price will correct areas and looking for price to continue the move. Again, I'm showing the model. The hook point 1, 2, 3. The moving impulse, another correction. Price are tapping 1, 2, 3. So here, what is happening here is a continuation within continuation. The same structure not happening one, the same structure not happening one. And some move we just this one there one say impulse correction, multiple opportunities. First correction, impulse correction, continuation. We had this correction again, another correction again, another correction again, correction. Continue the move. So again here pull another correction, and I'm no opportunity more than that. So risk exposure, another opportunity. So multiple opportunities to come. Besides range in do baby with this structure, we are looking for at least 90%, which is here. So more opportunities become. I'm feeling next week here. This structure near running. It's running. So let's wait for opportunities. So GBP card, real currency, also moving towards area. This one is also moving towards the value area. This one to remove correct opportunities. UNZD. Okay, so that one to our third touch area. Let's look at here our price layouts. Continue the move again. So let's wait for that's the recap of the weekly analysis on the JPY pairs, where they are positioned, why these impulsive moves are happening, and where I am positioned to take advantage of the next impulse. So this is it for today. Thank you.